Welcome to Samso and Coffee with Samso in particular. Today's guest is Mr. Peter Harold, the Managing Director of Poseidon. Peter, if you wouldn't mind, could you open with a macro summary of the situation today with Poseidon?
Yeah, thanks very much, Tony. So look, we've just announced a delay in the restart, and that's for a number of different reasons, which we'll go through a bit later on in the interview. The share price has come back a little bit, unfortunately. The market cap now sits around $100 million, and overlaid on that is obviously, nickel price is still reasonably good, but it hasn't gone off to the races yet. And there's been some more difficult announcements by some of our peers, which have probably sort of put a bit of a negative around the whole Western Australian nickel sulphide space. So I guess that's kind of the macro that we sit in today.
Thanks, Peter. Look, what I'd like to hone in on today on the back of, I think it was the announcement on the 17th of July, which was around delay to the restart. Two areas I want to focus on is the metallurgical side, and also there's the issue with connecting to, and the delay to connecting to the power. So if I can start off with the adverse metallurgical result, can you tell us a little bit more about that?
Yeah, okay. So look, a little bit of background to provide, because sometimes it's a bit more difficult to do that in an announcement, and it's not easier to chat about it. So when we did the original feasibility study back in, and that was put out in November of last year, we utilised a combination of the previous data from the production in the pit that was done by Newexco, and there's very good monthly data and obviously recoveries, and also amount of non-sulphide nickel, because that's the issue that we've come into. And then we took a composite sample, and we used that composite sample, which was basically picked up from ore samples we already had, and that was a number of lock cycle tests was done on that, and that correlated really well with the previous production data. So we were comfortable that the combination of the Newexco previous production recoveries and non-sulphide nickel numbers and our own composite sample gave us something that was around the 65% recovery for the disseminated material, the serpentinite. So that was what we baked into the feasibility study. And I might add that when we had 4 off-takers / financiers do due diligence, they were all comfortable with those numbers as well. So it wasn't something that was concerning us until we did the drilling from underground, and also the drilling from underground. We which was RC, and also the drilling in the open pit for the resource upgrade, which was obviously positive. As you recall, we actually increased the grade of the open pit resource from about 0.63 to 0.72, 14% increase, added about 8,000 tonnes of nickel. So that was very positive, and we put that out in June. Off the back of that, we also did some more test work on the non-sulphide nickel component. And what we came up with from those RC chips was some higher non-sulphide nickel numbers than the previous production had reported. So that was a little bit of a that's interesting. So what does that mean? And we actually went back and had the samples reassay with another lab, and there was a bit of a correlation, which again we didn't quite expect. So we sat down with all the experts, so that's Strategic Metallurgy, who are our metallurgical consultants, our metallurgy project manager David, and also GR Engineering, and all of those clever minds all said, look, it possibly is a furphy, because what's happened is you're using chips, and so you've got you've got a lot of fines, and those fines, when they're tested, they may give you a higher non-sulphide reading than is actually fact. And of course, non-sulphide means that it's difficult. You can't recover that into the concentrate, so therefore you just get more nickel going to the tail. So your amount of nickel that you produce annually could potentially drop. So as a result of that, we thought, righto, we need to do some more test work on this to understand if this is an issue or not, and we're hoping it's not. So what we're going to do is we're going to drill probably up to 12 holes in the pit, and the good thing is the pit's dewatered, so we can do that. Take all of that diamond core, so it won't be RC, and then we'll run that all through a combination of, we'll composite sample all of that, assay it, test it for non-sulphide nickel, and then we'll do lock cycle tests on all of that, which mimics the plant, right? So that's the best way to determine what the actual recovery will be. And we couldn't do this previously because the pit was full of water, and we didn't think it was necessary based on the work that we'd done for the BFS, right? So we're going to do that. It's going to take, we've got a drill rig planned to be there mid-August. It's probably about a month of drilling, and the laboratories have said if we can get all the samples prepped up to them by the beginning of October, they can get the results back to us early next year, February. Now, of course, the reason why there's a delay there is the Christmas break, and of course that we just unfortunately run into that. So that's the nature. So, you know, best case scenario, we do all of that drilling, have it all tested, and we come up basically with the same recoveries that we had in the BFS. That's what we're all hoping. And there is definitely a possibility that will happen. Percentage-wise, I can't give you that. But, and look, worst case scenario, if the recoveries are lower, then we'll need to bake that into the numbers. And you know, if it's material, we may have to put out a BFS update, you know, early next year. And that's just the nature of disseminated ore bodies. You've got to get the metallurgy right. You know, if you overstate the recoveries, that is not what you want. And also financiers now, and we've alerted them to this issue. We've given them copies, we've had discussions with them, and like everything, they're still obviously very interested in the offtake because the tonnes of nickel and the grade of the concentrate, but that'll be a CP to debt drawdown. So again, we just need to basically resolve that question.
Yeah, look, thanks, Peter. And I mean, it is fundamental. How much nickel are you going to get out of the project, and the impact that has on the economics of it overall is crucial. If we look at the BFS and we look at what the current nickel price is, we're looking at nickel prices come back up to around about $10. And if you look at adjusting the all-in sustainable cost figure, you were conservative in the BFS, but even if you add some inflation, you might bring that up to $5. So a simplistic equation says a nickel price of 10, a cost of 5, but then you've got to throw in the recovery rates, etc. Again, probably this is coming back up to the macro view, the situation with the global nickel market. Would you like to make a comment about that? Because it's quite interesting.
No, that's a good point. And look, you know, clearly you can look at the feasibility study numbers. We ran a base case of about $10.70 a pound, and an upside case of about 15, and the spot price back in November was about $12. So, and the nickel price, as you said, is just around 10. So it's not far below our base case. So, you know, and the project was economic at those levels. So that's good. Subject to all those recoveries being, you know, all the BFS numbers. The interesting thing about the macro is, you know, we have had a lot of Indonesian nickel come out, probably more than people expected, or certainly ramped up more quickly. And I think there was a belief, and I must admit, you know, I was of that school as well, that there was going to be a lot of nickel pig iron, but whether the Indonesians were able to produce as much mixed hydroxide precipitate as they thought, and it looks like they have been able to do that. And I would guess and argue that probably too on the demand side it's a little bit softer because of the global uncertainties of risk of recession and the Chinese economy. All of those things I think is probably slowing up the nickel demand in EVs. I haven't seen all the data yet, but from what I've read, that would appear to be. And so there's effectively a balanced market or a small surplus, and as a result, nickel prices have gone, you know, are sort of basically trading in that sort of spot where it's kind of considered to be a balanced market. My understanding is even at these prices, a lot of nickel production is at its sort of marginal cost or actually a bit below it. So, you know, what's happened is over the last few years is costs have gone up a lot. And as a result, you know, people at $10 sounds like a good price, but if you bake in all the inflation and the cost of the additional cost of labour and power and all the consumables, and really we're not seeing the nickel producers making a lot of money. A la, you know, the write down by IGO of Western Areas, Panoramic obviously had some production problems and some breakdowns in the plant, but even, you know, things are going normally, no one's making a lot of money. So clearly the costs have come up, you know, and that's made it tough.
Yeah, thanks, Peter. As he's indicated, it's a very interesting stage, nickel, at a global perspective. One of the things that I find quite interesting too, and you've alluded to that with the reference to the Indonesian nickel, from an ESG perspective, and that's becoming more and more pronounced, coupled with talk for some years now about a differentiation with LME listing nickel sulfides versus nickel laterites. Do you see that still potentially playing out, given what's going on in Indonesia, and their nickel is not as green as ours?
No.
So.
And I think that's very true. And I think, obviously, right at the moment now, probably a lot of that, or most of that Indonesian nickel is going into China, whether it be for stainless steel or for batteries. And clearly, as the Americans and the European car producers start to ramp up their electric vehicle production, they are looking obviously for other sources of nickel, and you've seen deals that have been getting done, by the Teslas and some of these other companies, Stellantis, where they are sort of looking into Australia, and Canada and those sort of places. So yeah, I sense that you'll end up having a situation where they'll sort of almost be like a sort of a China-Indonesia will be a strong relationship, and you could have, the North American car manufacturers and the European car manufacturers more focused on Australian type, and of course the Japanese and the Koreans too. So you might have a situation where they tend to get their nickel from other sources, longer term, and certainly that ESG component starts to become important as the production demand, for those tons of nickel ramp up. Yeah.
With Poseidon and sort of thinking about it as a point of difference, apart from the credentials as a nickel sulfide producer, if you do make adjustments for recent inflationary factors, and you come out to a ratio of roughly a $11 plus pricing to around about a $5 cost, does that not make Poseidon, given its infrastructural advantages, a cost-effective option?
Yeah,
a low-cost producer.
Yeah, look, I wouldn't call us a low-cost producer, because obviously, as you mentioned, it's $4.65, I think was the number, plus some inflation, and then you've got to add the payability, and obviously you've got to recover the capital and all those, and so the full cost basis. But I think everyone's cost basis come up, and I think that that is an important thing to recognise. It's not just us; it's all around the world. So whether you've got nickel production in Canada or in Indonesia or anywhere else, costs are up. And that's got to be baked in. And ultimately, if you're going to start to develop these big projects like the big laterite projects in Western Australia, the Ardeas and the Nicos of this world, you're going to need to have higher nickel prices for investors to be confident from a debt and equity perspective to back these things. So I think we are going to see higher nickel prices, but that doesn't mean that right now we don't see prices drop. Because it's at the moment the world, there's a lot of fluidity, a lot of volatility, and we're seeing that in the equity markets. I mean, everyone's taken a bit of a hit, not just in Poseidon, but in Panoramic and in a lot of the would-be nickel producers. And as a result, markets are a bit nervous, and that creates opportunities for savvy investors, because that historically with Poseidon, what you've seen is when the share price gets hit, that's actually an opportunity to pick up. And you saw with Panoramic, they went out with a very, and my old company, which I'm very, very fond of, they came out with a heavily discounted rights issue, and they obviously got it away. Well, not a rights issue, a placement. So, people are always looking for opportunities, and that was an opportunity. And I saw that Duncan Saville was supportive of that raise. I mean, unfortunately, IGO didn't come in, and you can understand, given their issues around the write-down of Western Areas, they're probably a little bit gun-shy. So, but great to see Duncan stepping up. He's been a big supporter of Panoramic in the past, and that was obviously very helpful in terms of getting that rights issue away. And I'm sure Victor's breathed a sigh of relief since that happened. I'll be catching up with him shortly, so it'll be interesting, to hear about all that. But we're in an interesting time, and what we've got to get through. And I've been in the industry now for nearly 30 years in nickel, and I've seen these things, and the volatility. It's one of the most volatile commodities, and I keep on telling my guys in the office that just because everyone, sort of doesn't make money at this price doesn't mean the price can go lower. And I've seen it gap down far lower than what everyone's marginal cost of production is. And, but then I've seen that, say, for instance, the Saudis have just paid $3.5 billion for 13% of Vale's base metal business. So that's an enormous sort of, and they're taking a long-term view, right? And I think that's what investors have got to do. But clearly when things, news comes out which is not positive, people tend to I feel, overreact. And if you look at our market cap, we're we're about $100 million today, right? So we've got two concentrators. One can process 2.2 million tonnes, the other one can do 1.5. The replacement cost on those projects today would be well north of $200 million, right? Possibly up to 300 for the 2.2 million tonne case. And, getting a permit now for a tailings dam and to build a project is a considerable amount of time. We're not talking weeks or months, we're talking years. And then to build a project like that, given the tightness in the market, it's 18 months to 2 years to get it built, right? So the delivery times to build infrastructure has been pushed out, the cost is going up. So then when you've got two plants in a very well located situation, they've got intrinsically more value. And we've also got 420,000 tonnes of nickel in the ground. So the market is not now valuing that, in my mind, fairly. So what it's done is, what's happened is value is here and price is there. And I think what happens is, you've got to get back to some sort of, and we have to obviously deliver now, we've got to get the metallurgy results back, but we can easily fill the gap quickly by maybe some exploration success, right? So that's why we're now focusing on target 5 at Black Swan, because we see that as an opportunity. Lake Johnston, we're going to do some drilling down there as well. So we've recognised that there's a hiatus now, and that people have sold their shares because they're sort of saying, well, we'll wait now until next year. So one way to sort of fill the gap is to bring in some exploration success, and that's what we're going to hopefully do. The other thing, of course, is that there's always the risk of, when your share price is low, of a takeover.
Well, I was actually wanting to put that to you, frankly, and it looked at from a little bit of a distance through my own eyes. I see that discrepancy in perceived valuation and values. You would be an attractive proposition, and to be able to get a stake in a company that's currently only got a market cap of around 100 million. Now, if I was looking at the market, I'd certainly be excited about nickel long term.
Long term.
And I would be looking at the intrinsic value, and I'd be thinking, how do I get my hands on that? So, look, can you for the sake of our viewers, talk a little bit about that, because I think you are a takeover target.
No, and look, I look at some of the transactions that have happened just recently. So you've got Oz Minerals acquired by BHP, and obviously there's copper in South Australia and Brazil, but one of the major reasons why they bought that was because of the West Musgrave project. 25,000 tonnes of nickel concentrate coming into the system. Part of I'm sure the reason to do that deal was to then underwrite the sort of 110,000 tonnes of nickel they need to for the smelter, and obviously they're talking about a major refurbishment of that in the next few years. You've had obviously Western Areas being taken over by IGO, $1.3 billion, and then Wyloo taking over Mincor for $750 million. And then even on a smaller scale, but still relative, you've got Canadian fund Kinterra taking over Cannon Resources for Mount Fisher. I think that was a $45 million transaction for 80%. So if you sort of look at it, 130,000 tonnes of nickel, no processing plant, an asset that would require, either a plant and a mine to be built, or to a mine anyway and then process the ore somewhere else. They've paid sort of about $450 a resource tonne. And if you use that metric, plus then you add our concentrators, you can quite easily come up with multiples of our market cap. So either investors recognise that, or somebody else decides to recognise it earlier. And and that's always the situation when, in my mind, when value is here and price is there. As I said, there's two ways to make up the gap. You can get there sort of via sort of successful, exploration, restart, all those other things into production and that way, and nickel price going through, or somebody decides to jump over the fence and sort of add value themselves. And that's always a risk when prices are low. And I'm sure that there are certain groups in WA that would be having a good look over the fence. And full disclosure, we've got all that information out there. Everybody knows what the feasibility study looks like. So they're able to do some pretty good desktop work, and depending on what nickel price you use, they could decide whether they thought we were cheap or expensive. And so be interested to see what happens in the next few months. But where you can't operate your business on that basis, but you've got to be ready for that. So we know what we think our business is worth, and we've done a lot of and the great thing is having recent takeovers like Mincor and like Western Areas and the Cannon Resources by Kintyre, you can actually do some metrics, ton of resource, nickel resource, what a concentrator will cost, all those things you can do. And I think we've got very strategic assets in a nickel province that's hungry for nickel feed. You've got Wailu and IGO talking about building a refinery down in Kwinana. I'm sure that they'll do that, and I think that to do that, they're going to want to have more nickel units coming through the system. We're going to potentially have at least 30,000 tonnes. If we go for the expansion project, we could be talking, a multiple of that. So we've got some exciting assets. We're near-term production, 12 months to get the plant refurbished and operating. So I think there's definitely, with a market cap of sub 100, people must be having a look at it.
Thank you, Peter. I'll switch the subject a fair bit by going into the situation that has arisen with respect to power, and Western Power have essentially said that it's going to take them a lot longer to meet their own infrastructural needs in order to connect to grid. So it's putting things back to late 24.
Correct.
Could you perhaps fill us in about what's happened there?
So when the feasibility study was done back in 2018, there wasn't any availability of grid power because it was fully allocated, and so that feasibility study was done on the basis of diesel, which is obviously more expensive for generation and less ESG friendly. We've been in constant contact with Western Power, and they've confirmed over the last few years that there is power available, and they've done quite a few studies on the infrastructure that we've paid for, and only recently did they come back to us and say, look, yes, the power is available, 11 megawatts on that line. However, we've done some studies of the infrastructure, and there's a requirement to upgrade, replace certain bits, and one of them is obviously, and one big piece of equipment is transformer, and that obviously, because of all of the delays and COVID issues and so on, the delivery time for those bits of capital have gone out. So they've obviously made some inquiries, and they said, they'd been telling us up until only a few weeks ago that power would be available by mid next year, 2024. So that sort of timed in with a sort of a mid-23 press the button to a mid-24 production, notwithstanding obviously the metallurgy sort of came in on the side. So as a result of that, they're now saying power's available, the amount you need for the 1.1 million tonne case will be available, but we can't turn it on until late 24. So that, as we announced, sort of came to us at about the same time as the metallurgy question came. So obviously those 2 points, the fact that we still don't have we need 150 rooms, and we still don't have an allocation for those in Kalgoorlie yet. We are talking to someone about potentially constructing those for us. The volatility in the nickel price, equity markets, all of those things, it was just like, hello, there's some delays here, so we can't press the button. And what we'll do is we continue to work with Western Power. We've just commissioned some more work that they're doing as part of their sort of process. So, we're in full belief that we're going to be going, and that we're going to need Western Power. And of course, the earliest they can get the power to us is late 2024. We've looked at sort of other options, and a standby generation for a small amount of time for that amount of generation would be incredibly expensive.
Well, one of the things I was going to ask you apropos power is There are a lot of players that have come into the marketplace in Australia, including in Western Australia, who have become quite proficient at installing the microgrids. And an 11 meg microgrid consisting of wind, solar, battery, you can still have a reserve of diesel as well.
Yes.
Have you investigated that, and what's the situation?
No, we have looked at that, and one of the reasons why that's not something that we've sort of put into the feasibility study is the relatively short life of the project, 4 years. We have had some discussions with some people that are looking at maybe building a solar power station out near us, and actually knowing that we've only got at this stage a 4-year project, that would continue and they can pump power back into the grid afterwards. Yeah. So again, these things are all fluid, but certainly, I mean, that's an option for us. But right now, the most attractive, the cheapest and the easiest thing to do is to hook up to the grid, and it's there and there's power available. So that's what we propose to do. And now with the metallurgical question, the timing actually fits. So it sort of works. So it's just one of those sort of, I guess, twists of fate, if you like. But I mean, the good thing is the power's available, because that is a much cheaper option than having to build an expensive, sort of wind, solar, diesel backup. That's all going to be expensive. It would work for a 20-year project, but for a 4-year project, it's a bit skinny.
Yeah, I mean, you've got other drilling targets, and part of your overall strategy has been to increase the life of mine, and the upgrade and the resources been pushing along that way. I would imagine you're very hopeful that when you add Lake Johnston into the equation, maybe even and Windarra, and additional targets at Black Swan, Silver Swan, you want to. Are you hopeful that you'd extend the life of mine to, say, 10 years?
Oh, look, I mean, that would be fantastic, Tony. But, look, it all depends on, exploration success, nickel price, all of those things. I mean, the one that's really exciting, which is also a near-term thing, is that we're going to be giving an update or a PFS on the expansion project, which is the Ruffacon project. And that's a really exciting project, because even though the project life may not be much longer, we're talking about a significant increase in annual tonnage of nickel in a product which could be consumed by a POX plant, a la a Kwinana type plant that Wailu and IGO are talking about. It could go into a HPAL. There's a number of options there. PBT, we're still talking to them. They're doing their feasibility studies. So there's a number of, I do think there'll be more POX plants built in Australia, and I think that product would be ideal for, and that where you can treat all the talc carbon that would currently be mined but not processed. So there's an incremental, there'd be the incremental cost to treat from 1.1 to 2.2 would be offset significantly by the fact you've already mined it. So that could end up being a better financial outcome. And so we need to know those numbers, and now that's going to align, not by plan, but now by a result of the feasibility that will, or the metallurgy, that will actually have that information before the end of the year. So we'll be able to compare apples with apples now, which is really exciting. And we will have done the drilling on, certainly up at Silver Swan on Target 5, and also potentially the drilling down at Lake Johnston too.
Yeah, which is exciting, and
Exciting.
The results to date are very encouraging, and you've identified some very good targets. Looking at the company finances, and the quarterly has just come out,
Yes.
You've got about 5.7 million in the bank,
Yes.
and a cash burn, which I know is somewhat flexible, of roughly 4 million a quarter.
Yep.
Where are we headed on the financial side?
Look, I mean, obviously, things start to get tight, and towards the end of the year. So, and we've stated that in the quarterly that we've got sort of I think between 1 and 2 quarters of cash available. So look, we're looking at options there. I mean, we're looking at a combination of there's potential to do some asset sales or an asset sale. There's potential for cost reductions. And there's always, the opportunity to do an equity raising. So look, the board always considers those things, and the main thing is to maintain enough cash in the system to be able to do the things that we want to do. So a combination of all of those things, Tony, and we continue to monitor that on a pretty much a weekly basis. And we have got a number of initiatives that are going on. Obviously, can't mention any of those things other than what we've stated publicly. But yeah, we are looking at a number of things that may be able to bring additional cash into the system to fund some of those priority activities that we have.
Look, I've got to put the hard question to you. It's a hard question to put to anybody as managing director of a publicly listed company that's which relates to the share price when it's taken a tumble. So the share price has dropped from about 4.5 cents at the timing of the announcement about the deferral of the project, and it's currently at 2.6 cents this morning. Do you want to talk about that share price performance?
Only to say that it's disappointing, and I do feel for all investors who are underwater. It's tough, and I think, as I said during the interview, I think we're now at a situation where our share price doesn't reflect the fair value for the assets, and I think we've got a bit of work to do to get the market back to a situation where the share price reflects fair value. So we've got a gap there, and we've got to we've had some issues that we've had to obviously deal with, and we've had to explain that to the market. The market didn't like it, which I understand, and as a result, we've got some work to do as an executive team, and we can only deal with what we have. And overlaying that, I would also say the macro has got more challenging, and we're seeing that with our peers. So you sort of feed that into and probably that hasn't helped. But I do understand why people have voted with their feet. But in the situation where the shares have been trading, there have been buyers on the other side. And it obviously gapped down on the first day, bit of wind coming through. It gapped down on the first day, but it's held. Since it sort of found its new base, it's holding there. And I think people are starting to see that there's a big value gap opening up. And so again, the best way to close that value gap is and avoid somebody else doing it, is to have positive news flow and obviously the macro improving, nickel price going up, and people getting more confident around the supply demand and higher nickel prices going forward. So it's going to take some time, and so that's a job for the executive team.
Thanks, Peter. My observation on Poseidon, which I've looked at for quite a few years, is it's always been a complex project, but credit to you and your team, a lot of that complexity has been worked through. Notwithstanding the recent issue based on the mineralogical side of things and the metallurgy, you've talked about how you're resolving that, and I think that's one of the key takeaway messages are, yes, it is complicated, yes, there are issues, but these are the way that you're working way through to resolve them. And that message is coming through in what you've said here today. So to sum up, my own observation is it's been a tough nut to crack. It's a tough nut to crack, but it's probably 95% of that unpacking of that nut has been done. There's a little bit more to go. Once that's done, the market should recognise that disparity in the value as it is today to what it could and should be. In addition, there's many other upside aspects to it around the drilling programs, the overall resource, and the economics of it.
Yeah.
So
I totally agree with you. I think it's a good sum up, and really, you see, as I said before, you get a situation where the value is clearly sort of up here somewhere, and I can't put a number on that but other people do. And I would encourage shareholders to read some of the research that's being put out there, and then I look at where the share price is in our market cap, and I know that there's a gap. And how big that gap is, is dependent on a lot of things, and some of the things that we can deliver, and other things which the market will deliver over time.
Thank you, Peter. I appreciate you coming in today.
Always a pleasure, Tony. I enjoy chatting to you. Very knowledgeable, and your questions are well researched, and appreciate the opportunity to explain some of the nuances of our project and the market to the investors.
Thanks again, and I hope everyone takes a clear-eyed view on the company. You've had the pleasure of seeing a number of interviews with Peter over the last year or so, and he's always been very upfront, and I think that it gives, as I said, a clear-eyed person looking at the company a good perspective. The pros and cons are there for you to evaluate and make your own call. But thanks again, Peter.
Pleasure.